We are moving on to the last part of the chapter, adjustment 14 and 15. With that, adjustments are getting over. Adjustment 14, you give the heading goods distributed among staff for staff welfare. Okay, goods distributed among staff for staff welfare. Now again, when this item, when it is given as an adjustment, it is the goods getting affected. We are distributing goods, whether it is given as charity or whether it is distributed among staff or employees, we are losing goods. So it will be affecting the purchases first. So just like we did goods distributed as free samples and all, here also this adjustment 14 also first it will affect the purchases. So from purchases we will less this item, that is goods distributed. You will write like this, less staff welfare expenses, meaning is the goods is what we are deducting. So you write like this. Okay, so first you have to deduct it from purchases, then this is an expense basically. So next we will have to show this in the P&L debit side to staff welfare expense. So this is the double effect and it is usually given as adjustment only. So two times you will have to write less it from purchases because we are losing goods. Second thing is it's an expense basically, it's staff welfare expense or just like your samples or advertisement expense. So next is we have to show in the P&L, nothing to be shown in balance sheet. So it's similar to adjustment 12, that is goods distributed as samples. Then next heading, that is 15th one, adjustment 15, abnormal or accidental losses. Abnormal or accidental losses. Okay, accidental losses or abnormal losses means example what we can, examples would be familiar to you, loss of stock or loss of goods due to fire or due to any natural calamity like earthquake, flood and all. Then loss of stock due to theft. So all these are abnormal or accidental losses or loss of stock due to any accidents. So whatever it is, again we are losing goods. So we have different cases for this loss of stock due to fire, due to theft and all. For abnormal losses you write subheading A now, when the goods are not insured. Okay, so when goods are not insured and if there is a loss for you, loss of goods due to fire or due to any natural calamities, you had a loss for rupees 10,000 suppose. We will see the double effect of this particular item in the financial statement. First you know that it will affect your trading account because we are losing goods. You can show, actually it is just like that provision and all. Usually we will be showing it as a reduction from purchases, isn't it? Since we are losing goods, we will write to purchases. Less loss of goods we will write. But for this particular item, the way of presentation is usually on the credit side. They will write it as like by loss of goods or loss of stock by fire. Not on both sides. Either as usual you have to deduct it from purchases. If you are comfortable with that, you continue like that. No problem. Just like I discussed about provision. Provision either you can show on the liability side of the balance sheet or show it as a deduction from assets. Both are correct. Understood? Same like that. Similarly, here also this loss of stock either you deduct from purchases or show it on the credit side. Here nothing to be deducted. It is shown as a separate item on the credit side. Or as usual you deduct from purchases. It is or don't show on both sides. Okay. So I am just following like this. This is the actual way of presentation on the credit side. Other items also you can do the same. Like we deducted drawings, samples and all from the purchases value. On the debit side you wrote 2 purchases, less samples or less drawings and all. But instead of that, if you want, you can write on the credit side. So no need to show it as a deduction. Credit side will write by drawings or by samples. Directly you can show that. That's also correct. Okay, either one you can show. Then in this particular case, the P&L account, next we have to show, okay, loss is 10,000, that we will record completely 10,000, and it is not insured, there is no insurance company in this case, and this loss should come on the debit side. We know that all losses will be debited in P&L. So this loss of stock by fire will show in the P&L. This is the double effect if goods are not insured. Okay, so write like this. No need to write it as sentence, just write it in the format. Then second one, that is subhead B. When goods are fully insured. When goods are fully insured. Okay, so we can write the same example. We have a loss of stock for rupees 10,000. Now the insurance company agreed that they will pay us the full amount of claim, entire 10,000 we will be getting. So we will see the double effect of case B. So we have to first record in trading because anyways we are losing goods. So either show it on the debit side, deduct it from purchases, or as separate item you can write on the credit side by loss of stock by fire. See, this is just a specimen format I am showing. When you do the actual question, you must have sales, closing stock, everything. So by loss of stock by fire, entire loss we will write 10,000. Next, previous question, previous case we wrote debit side of P&L, we have to write this loss of stock because it was not insured in that case, and we will have to suffer a loss. The firm will have to suffer a loss. But in case B, it is completely insured. That means we will receive this amount of 10,000 from insurance company. Are we suffering any kind of loss? No. So, should we record anything in P&L? No. Instead of that, in the balance sheet you have to write something. On the asset side, we will write one item like insurance claim, and they have agreed that they will pay entire 10. So, entire 10 will show. It is a receivable amount for us. So, it is an asset. So, we showed in the balance sheet. Nothing in P&L because we are not suffering any loss. So, this is the situation when it is fully insured. Okay. Then case C, when it is partly insured. When it is partly insured, again taking the same example, the loss 10,000, insurance company agreed that they will pay us a claim of 8,000. You would have understood the treatment now itself. So, we will see how to do it in the format. So, trading, either showing on the purchases, deduct it from purchases, or show it on the credit side by loss of stock by fire. The entire amount of loss we will show first, 10,000. Then, are we suffering any loss in this situation? Yes, we are. Because loss is 10, we are getting only 8. So, 2,000 is a loss for us, which we have to show on the debit side of P&L. So, we will write to loss of stock by fire. That 2,000 we will show. Again, it is not over. We have to show something in the balance sheet because insurance company will pay us a claim of 8,000. So, insurance claim, insurance claim 8,000 we have to show on the balance sheet asset side. So, do not think like we have recorded it 3 times. Just see the figures, 8,000, 2,000, altogether it is 10,000. This side also 10,000. So, it is only the double effect. Do not take it as we have recorded 3 times. Amount also you have to see. So, here what did we do when it is partly insured? First, the total loss we credited in trading. Then, since we are getting 8,000 from insurance company, the balance 2,000 will become a loss. So, that we debited in P&L, and the receivable amount 8,000 we showed on the asset side. Understood? So, 3 subheads we have for that adjustment 15. Now, we will work out illustration number 20, that is a GST question. We have done GST question before. I mean, in previous chapter, financial statements without adjustments, you had GST portion. I hope you remember the treatment. GST need not be shown in trading and in P&L. It will be shown only in the balance sheet. You have to set off input GST with output GST. If there is any balance in input GST, it will be shown on the asset side, and if there is any balance in output GST, that means it's a liability. Output GST is a liability, it's payable amount to the government. So, output GST, if there is any balance, show it on the liabilities. So, that's how it is. It will be shown only in the balance sheet. So, illustration 20, go through the adjustments, closing stock, outstanding salary, outstanding wages. So, along with this, you put a tick mark, prepaid insurance, accrued commission, charge depreciation on machinery. Then the last one, stock valued at 1,500, destroyed by fire, and insurance company admitted only a claim of 950. So, which case is this? This is case number C of adjustment 15. So, we will start the trading account. I hope you have put tick marks against adjustment, items having adjustment. So, now we will do the financial statements, give the heading and draw the format. Do we have opening stock, or see whether it is adjusted purchase is given? In one question we had no. See, here we have opening stock directly in the question, so you can take that to opening stock 8,40,000. Then purchases, before that you must see whether there is purchases return. Here we don't have any purchases return, so directly you can write purchases in the outer column. So, it is 33 lakhs. Then it is freight on purchases. Did you see wages there on the debit side of trial balance? The debit and credit sides, they have separated in this question also. So, it is easy. And the third item is wages. In your textbook solution, they have written freight on purchases. It is actually correct, but as per the order, wages should come first. So, when you write wages first, because that is the third item now. So, only after that we will be writing that freight and all. So, wages, it is 2 lakhs, and wages is having an adjustment. You have put a tick mark against wages. So, add outstanding 20,000. Then we have freight on purchases. Freight on purchases means when you purchase something, the shipping charges you spent on that. So, it is again the transportation charges, and since it is on purchases, it is like carriage inwards or it is freight inwards. So, we can write it in the trading. If it is freight outwards, you must write it on P&L. Or simply freight means it is like freight inwards, just like carriage inwards. So, this is 48,000. See whether you have any other direct expenses, no bad debts and all, loss will be debited in P&L. So, that is over. Now, we will move on to the credit side. You should remember about that loss that we haven't deducted from purchases, we will show on the credit side. By sales, do we have any less returns? Yes, there is sales returns in the question, 60,000. So, by sales 50 lakhs, less return, sales returns or return inwards 60,000. Yes, 60,000. So, it is 49 lakh 40,000. Then by closing stock, take it from the adjustment 9 lakhs. Then there is one more item, that loss of stock or loss of goods. Here is it due to fire. Yes, by fire. You must write the total amount of loss here, that is 1,500. So one effect is over. Next, in P&L and the balance sheet also we have to write. Now your trading account is over. Find the balancing figure. We are getting a gross profit 14,33,500. When you do calculations and then take all these amounts. Don't simply copy. So to gross profit carry down, and the total is 58,41,500. Now we can start P&L by gross profit brought down 14,33,500. Now all indirect expenses we will write on the debit side. Just see the debit column. They have separated debits and credit column. So first one we have salary, against which we have an adjustment. So start with salary. It is 3,20,000 and the adjustment is outstanding salary 32,000. So it is 3,52,000. Then insurance we have, which is an indirect expense. So to insurance, against which we have an adjustment. So in a column you write 2,20,000. Then adjustment is prepaid insurance, so that is less prepaid 9,000. So 2,11,000. Then bad debts, yes, of course bad debts we have to write. Here there is no further bad debts, no new provision. So directly you can write in the outer column. To bad debts, it is 60,000. Then after that, commission is given, but you have to see. I have told you if nothing is mentioned, it is commission paid. But here they have separated the columns, and commissions figure they have written in the credit column. That means it is commission received, not commission paid. Though nothing is mentioned, they have separated it into debit and credit column. So it is commission received. That you should take carefully. And against which we have put a tick mark. That means it is having an adjustment. Write the amount in the inner column. And the adjustment is accrued commission. I hope you remember this accrued commission. Accrued commission means it is receivable commission. So which we have to add. It is receivable this year. So we will add and take that 12,000. Then what else is there in your trial balance? Then GST we will consider only in the balance sheet. So items in trial balance over. Next we can go through the adjustments. Adjustment 4 we haven't recorded. The depreciation we have to take now in P&L. So to depreciation on machinery, that is 10%. You can directly compute 10%. So depreciation will be 21,20,000 into 10%, 2,12,000. You can write within brackets for you to understand how we got all these figures. So that when you sit in exam hall also you can recheck the answer. You need not do calculations again. You can just check the answer like that. Yes, depreciation we recorded. Then the last adjustment, that is the loss of stock. Already we recorded total loss 1,500 there. We will be receiving a claim of 950 only. So the difference 1,500 minus 950, the balance will become a loss which we have to show on the debit side of P&L. So to loss of stock by fire, that difference 1,500 minus, is it 950? Yes. So 550 will show as a loss. Now we finished adjustments also. So we have recorded all items in P&L, compute the balancing figure. Here we are getting a net profit. So to net profit transferred to capital account 6,47,950. Write the totals and then you can close your P&L. Next we will start the balance sheet. Totals you have to write. Then balance sheet we will do now. Give the format heading. With capital we will start. So capital amount is 31,88,000. With that we have to add net profit and less drawings. Here the net profit is 6,47,950. Then see whether you have drawings in the question. In this particular question we don't have drawings figure, so you don't have to take anything. 38,35,950 you can write in the outer column. Then we'll go through other trial balance items, but you need to refer only that credit column because we are writing the liability side. So we'll write the next one. Okay, we have creditors 4 rupees 4 lakhs. You have to look into the question and don't refer the illustration, solution and work out. Then we have, yes, so with sundry creditors, only these two items there inside the trial balance. Now we will go through the adjustments. We have outstanding salary. So all these must come here. 32 and outstanding wages we have. Outstanding wages or wages outstanding. It is 20,000. Okay, that loss, that insurance claim will come only on the asset side. Depreciation also on the asset side. So we will start the asset side. Write the fixed assets first, that is machinery we will write first. Machinery is the fixed asset given against which we have an adjustment. Consider that also. So machinery, the amount is 21,20,000 less depreciation. It is 2,12,000. So the amount is 19,08,000. Then see whether you have any other fixed asset. We don't have any other fixed asset, so we'll write the current asset. Start with closing stock. Closing stock, the amount is 9 lakhs. Now go through the debit section of your trial balance. See the items given there. We have cash in hand and cash at bank. You write it now itself, otherwise you will miss out these items. Actually these should come at last, but since there is chance for you to miss out, you write now itself. 80 and 1,20,000. Then wages, sales, machinery, bills receivable is there 4 rupees 4 lakhs. Then opening stock is given. That shouldn't be taken here, only closing stock will be taken. Opening stock already recorded in trading, don't get confused by that. Then we have debtors. Debtors is not having any adjustment. Usually debtors will be having bad debts and all further bad debts. Here debtors figure you can write directly in the outer column 8,60,000. Then bad debts, it's a loss actually. GST will consider last, don't forget GST we have to record. Go through adjustments now. Closing stock we recorded, outstanding salary. Prepaid insurance, yes, that's an asset. Prepaid insurance, the amount is 9,000. Then we have accrued commission receivable, it's an asset, so that also will show here. Accrued commission 12,000. Yes, depreciation we have deducted already from machinery. Then that insurance claim must be written here. Insurance claim of 950. Yes. So we recorded all items except GST. Yes. Now we'll discuss that GST topic. Already we have discussed. We know that input GST must be set off against output GST, and there is an order of setting off, isn't it? That is, input CGST, first it should be met from output, same head CGST, output CGST. Balance, still if there is any balance, that you can meet from output IGST. Similarly, you have to do for input SGST also. First meet from output SGST, later you have to meet from output IGST. Actually for exam you don't have to do like this. This is for you to understand, but if you are getting confused, you do like this. Then we have input IGST, integrated goods and services tax. First you meet from output IGST, then from output CGST, later from output SGST. Always first from the same head. If it is CGST, take it from CGST, but it's output CGST. Okay, now here we have input CGST, an amount of 4,000. Then see whether we have output CGST. We don't have, but we have output IGST 15,000. Okay. So from 15 you can meet this 4. There will be a balance of 11,000. Balance of 11,000 in output IGST. 15 minus 4, 11,000. There will be a balance in output IGST. Then here we have input SGST, and that amount is again output. Input SGST is 4,000. This was also 4,000. Okay, so input SGST is 4,000, which we can now meet from this balance 11. So now there will be a balance of 11 minus 4. There will be a balance of 7,000 in output. Sorry, not in output SGST. It's output IGST. Understood? So in input IGST, now what is the amount in input IGST in the question? It is 5,000. This 5,000 we can meet from this balance 7,000. After that we will be having a balance of 7 minus 5, we will be having a balance of 2,000 in output IGST. This is your final answer. After setting off, you just have to take this final answer in the balance sheet. Understood? We started with this. We had 15,000 in output IGST. From that 15, we met first the CGST of 4,000. So balance we got 11. From that 11, we met this input of 4,000. All these three figures given in the trial balance. So we took that 4 from that 11,000. Then we had a balance of 7,000, 11 minus 4. From that 7,000, we met this 5,000 input IGST. So now there is a balance of 2,000 in output IGST. Which side is more? That side is having a balance. That's the meaning. Output IGST now has a balance of 7. Input IGST is only for 2,000. So balance will be there in output IGST. It's not like balancing the account. We are finding which is more, and that is having the balance. So output IGST now has a balance of 2,000, and I told you already output IGST or output GSTs must be shown always on the liability side of the balance sheet. So here we have to write on the liability side this last item, that is output IGST, balance of 2,000. Only we have a balance of 2000 to be shown in output IGST. With that, your balance sheet is over. Just add and see whether you are getting the same answer on both sides. Now you can close the balance sheet. So that is how you have to do setting of input GSTs with output GST and take the balance. If it is output, if there is balance in output GST, show it on liabilities, or if it is balance in input GST, show it on asset side. So with this adjustments chapter is over. It's very much important. It's sure question. 8 marks question will be from this chapter, no doubt. So study well. First of all, you have to go through adjustments, but don't by heart. Again, you have to think of the nature and do the effect. If it is asset, show it on liability. Show it on asset side. Then expense means debit in P&L. But again, you have to think whether it is direct or indirect expenses. So repeat these videos 2-3 times. Learn it carefully. Okay.